So Dmitry, I know with stablecoins, you've got a view. Please, can we cover a little bit here on stablecoins? What is your view on stablecoins as they exist today?
Okay,
go.
So there are two types of stablecoins. So the stablecoin back to the fiat currency, and there are a few of them, or the stablecoin back to some bucket of different assets or whatever, can be algorithmically backed or somehow. So I'm not talking about the second one, but the stablecoin backed to fiat. So they have the fundamental problem is that nobody knows how much money is actually on the bank account of the company issuing the stablecoin. So obviously you can do the audit, but audit is done like once a quarter or whatever, once a year. So the best case, you have the audited accounts, which are like a few months outdated, so a few months back.
So as long as at that quarter end, when that auditor's checking the balances, etc., that they tie, anything between the start of a quarter to the end of a quarter, anything goes, right?
Yeah.
Wow. And we're talking about Tether here.
Yeah, well, yes.
And others.
Biggest one.
And others.
And others, but Tether is obviously the biggest one. Yeah. Okay. And then what you can do, then there are markets where the Bitcoin and other cryptos, but Bitcoin being the main like crypto asset, is traded not to the fiat currency, but to this stable coin.
Right.
And once you have this sort of like window of non-transparent situation, so you can manipulate this market. So basically you can issue this technically, you can issue this a bunch of these coins, go trade on this platform which trades the stable coin against Bitcoin. You can pump the price of Bitcoin. So
I feel like we need a whole separate interview on stable coins.
I'm not saying that this is being done,
but it's possible.
Yeah, perfectly possible. And that's why my view is that no Bitcoin ETF will be ever approved by SEC while there is Tether.
No Bitcoin ETF will ever be approved by the SEC while there is Tether.
Well, there are markets which allow to trade Tether against Bitcoin.
Because there is room for exactly what you were just describing, for manipulation.
Because when you have this ETF approved, it goes retail, so the company starts getting money from retail, and that's a perfect situation for potential manipulation.
Right.
What happened in 2017?
Yeah.
So again, so there were like, I'm not saying that there was sort of like agreement between the parties, but the situation looked like the following. So basically, there was a pump on Bitcoin price, and on the wave of this pump. So Coinbase actually done lots of advertising stuff on their wallet. So a lot of retail people, the retail investors, came in to Bitcoin, which actually multiplied this pump.
Right.
And then basically those who started the pump were able to exit.
Yeah.
So basically, who paid for that? The retail
traders.
Retail investors. So I
no different to any other market.
I can go further. So all these ICOs, which were fueled by this pump, and 90% of these companies are actually are nowhere at the moment.
Right.
So who paid for that? The retail
traders.
Yeah. So who actually bought the Bitcoin at 20 grand.
And what you're trying to do, and it actually aligns very well with the Crypto Wizards initiative, is you're trying to level, and Nick, you said this over and over and over again, you're leveling the playing field. That's really what you guys are standing for here. It's just bring transparency and level the playing field because we're in this together.
Yeah, I mean, look, if you're smart and you're clever, then there is money to be made.
Right.
But at the same time, you know, the truth is very difficult to get in the crypto community. You know, whether it's on an exchange, whether it's what's going on behind a project that's being funded by crypto, it's very difficult to get the facts and the truth.
Right.
And therefore, you know, the CRIX exchange is focusing on a different kind of behaviour because it's aimed at See, the one we have to report for two parties, don't we? We have to report to the investor trader community, so we have to tell them what's going on. But above all, we have to report to capital markets regulators.
Right.
And they want to know exactly what you're doing, who's involved in your community. It's a trading market. Who are the players you have? How are they behaving? How are they performing? What are they doing? How much volume you've got? How are you settling? You know, because the worst case scenario is people getting hurt in a community.
Right.
And in a regulated environment,
always pays.
In a regulated environment, there is recourse because you can complain to a regulator.
Right.
In an unregulated environment, there is no complaint. The regulator will say, well, you know, it's unsanctioned, an unruly market. Buyer beware. It's up to you. You were foolish enough to get in. There's not a lot we can do. Right. So, but I mean, look. Let's just my comment. Six pence worth on stablecoins. You know, I can see stablecoins linking to an underlying asset like gold, a gold-backed stablecoin or a basket of precious metals. I can see the value of that because it would lean to a natural hedge instrument if that was paired on an exchange to other things. So that makes sense. But let's think about it. A stablecoin linked to fiat. Over the last 600 years, all fiat currencies go to zero. The dollar has lost 97% of its intrinsic value. Correct. It is going to go to zero. Right. So be careful what you wish for. You know, stablecoin back to fiat.
Be careful of a stablecoin that's linked to something that's going to be about as valuable as the Zimbabwean
Exactly.
dollar.
There you go.
Yeah, so it doesn't make much sense. Right. Yes, but it's a perfect instrument for the manipulation. But I think is that
you heard it here. An instrument for manipulation, not necessarily. That's its use case.
Our stance is just to bring as many traders who use stablecoins to fiat trading.
Right. Because you're trying to make that gateway to fiat and the accessibility from fiat to crypto easy.
Yeah, obviously it won't happen everywhere in the world at once. So we'll start from the US and the EU, but we are in talks with different players in Asia as well. So we might be able to allow withdrawals to the local currencies in Asia. So and then later the deposits, because it's obviously it's more difficult. But yeah, we are talking and also giving them the opportunity to exchange to USD, just to consolidate them to the single USD market, because USD volume is the biggest volume. So we want to sort of boost this and maintain this as a main market. And also, so generally speaking, say crypto, there's a fundamental difference between fiat and crypto, and between the currency for spending and the currency for saving. So because when you're buying something, paying with the currency for buying something, paying your bills, so you expect this currency to be stable. But when you are saving, so you expect this currency to grow in value. So you expect your savings to grow in value. And this is sort of things which are contradictory by nature. Right. Because how the fiat, how the central banks and the regulators, how they maintain the stability of the fiat currency, how they fight with the volatility of the fiat currency. They just print the money. Yeah. So the value of the currency goes down, and that's the price for its low volatility, for its stability.
And when do we pay the price?
Yeah, well, with the crypto, so the supply is limited by the algorithm. Right. So you can't print the money, you can't...
you have to face the pain today.
Yeah.
Which creates volatility.
And it creates volatility.
Yeah. Which is correct.
Yeah, and this is good, but you don't care if it's volatile, if you don't paying with it, if you're just saving with it. Right. So you have the long term, and the long term view is that it goes up. Yeah. But you don't care about the volatility.
Because it's scarce.
Right.
Yeah, because it's scarce.
Right.
Yeah, so that's the difference. That's why I personally think that the main use case for Bitcoin is the asset for saving. Right. Rather than the payment system.
So can it become a reserve currency? Yes, it can. And will it?
Maybe.
You know, but what? Look, you know, you got to think back to some of the things. So the majority of youngsters out there, you know, maybe your community, then maybe millennials or maybe a little bit older. But the thing is that they have to think back to, history and economics and history repeats itself all the time. So you go back to 1971, so Bretton Woods, when the dollar came off the gold standard, that enabled, as Dmitry said, is the central banks to print money. At that point, supply was controlled because it was pegged, I think about $34 an ounce or whatever, but it was pegged to gold. Now, why did Nixon come off the gold standard? Is because after the Second World War, the Fed became the central currency. So the US dollar became the reserve currency. The Fed became the world central bank in a sense, and France and England sent its gold reserves to the Fed. So that happened straight after the war. So then we went to a basically US dollar global economy. But what then happened just before 1971 is that France and the UK asked for their gold back, or their money back, or the US equivalent.
And let me guess, it wasn't there?
And it wasn't there. So they had to come off the gold standard so they could get the printing presses going. So since 1971 to now, and then Clinton in around sort of like 94 with the Glass-Steagall Act, basically allowed the banks to leverage their balance sheets to become too big to fail, which was actually a strategy. Because when they, so it allowed Travelers and Citi to merge, I think it was, and they become these enormous, like RBS, Fred the Shred was allowed to build it into one of the world's biggest balance sheets. But the problem with that, of course, is that at some point they were going to fail, and they knew that the taxpayer would have to bail them out because otherwise the system would collapse and the government wouldn't allow that. So it's actually a known strategy. But so when you look at money, there's a difference between currency and money. And Dimitri's articulated that very well. But, a lot of people have to think about, why is crypto significant? Well, now, having just said what I've said, is that the fractional reserve banking system and the Fed-based economy is not working because there is no restrictions. There is not one government on the planet that has the fiscal discipline to manage currency on behalf of the people for savings or what have you.
So you need to take it away from the humans.
And the reason being, exactly, and the reason being is America, the UK, whatever, what are they thinking about? The next election. So they're using money supply, the printing presses, to win favour with the electorate. If you go to the GCC, Saudi, Kuwait and UAE and what have you, or you go to China or Japan, they actually don't behave like that. And I know their economies are mixed and varied, and they are sort of like benevolent dictatorships in a sense. But what they do is they do have a 25, 50-year plan, and they plan their economies and they plan their currency and they plan things around a much longer-term view. But in the West, it's all about the next election. So if you've got a Western-driven banking system that is driven around that kind of doctrine and behaviour, then, the dollar's going to go to zero very, very quickly. Sterling will fail, the euro will fail, because they are, the European Central Bank is exactly the same as the Fed. Right. And they are printing capital, they're destroying the value of our assets, our houses, our pension funds, our savings.
And what's propping it up, Nick? Is it just a belief? It's a belief system?
They don't think it, well, I've spoken to various central bankers and they don't think it can fail. They think they can just keep printing money. They really do. And people said to me, we're over leveraged now, debt is into the trillions, but
we're talking like 20 trillion, just the US alone.
Oh, much, much, much more. Global debt is about 240 trillion. I think the US, in fact, there's a website you can watch the US debt clock. Yeah. Very interesting. But I think their debt is 4 or 5 times what we've just said. So it must just
be a belief system then, because if we believed the dollar was worthless today and stopped accepting it, surely that's the only thing that will allow it to collapse.
Look, the way I explain this is that in the 50s, my parents bought a house. So my parents are war generation. My dad's dead, but my mother's 91. War generation, they bought their first house for £250. At that point, my dad's salary was £300 per annum. So there you go. The value of your house and annual salary.
Outrageous when you think about it.
Right? So where are we now? That same house is probably close to $1 million. Yeah. And the salary is probably 40K, 50K.
Somebody who earns
there you go.
A 6-figure salary, dollars, we talk US dollars, so someone today who's, say, around my age, between 30 and 40, they earn a 6-figure salary. They are able to get a mortgage, maybe if they were able to save, and they're able to pay that mortgage off over, say, 30 to 40 years. That's how the economy is working now. And so for somebody to have a six-figure salary as the minority, the masses are earning, I think the average salary is 35 to 40.
But you have to pay off student debt. So if you went to university, you've got that as well.
Right.
Okay. You have inflation. And if the interest rates go anywhere around 5-6%, you're paying for that house over 40 years twice.
Yeah. And I believe, and we do have a person from France here in the room, mortgage means agreement till death, I think, if you translate it from French to English. Is that right, Francois?
Yes,
mort.
Yeah, death.
So it's the mort bit.
It's the mort bit. That bit I understood.
Yeah, but look, I mean, so there's lots of parallels. So, you know, if you think about it, every financial product is being engineered to work against the people, for the kleptocrats to take money out of the top of the system. Okay, so this is my libertarian side coming out. so the reason why is, so pensions, failed product, doesn't deliver for anybody apart from civil servants who get employers' contribution of 26% in this country. They're the only people that make money. So what happens to a pension? So it's basically a tax wrapper on payroll, where they take a contribution out and it's matched by your employer. But you need £367,000 in your pension pot to draw £1,000 out a month at retirement. Right. Well, that's already beyond 90% of the population.
Doesn't add up.
Okay. The second thing is that pension pot, 40% of your savings over that 20 or 30 year period is taken in fees and charges. 40% in fees and charges, but it's never disclosed on the pension company's balance sheets, on the product, on your statement.
Right.
Okay? And they invest your pension money into things that deliver quite often zero or average market returns.
And why do they do that?
Because of the reliability, so they need to...
100%.
So what would you say to somebody who's saying, hey, I'm paying into the average pension, I've got employer contributions of 5 or 10%, and that's what I'm doing with my money. Would you tell them, stop?
Absolutely. Pension is a failed product.
Yeah.
So you may end up with, I don't know, £200,000-300,000 in your pension pot after fees and charges. Then you have to convert that to buy annuities. So ultimately, 200 grand, you can't live off that.
For sure.
You know, so unless you've fortunately paid your mortgage off, okay, which you've paid for twice, and if you happen to get ill, you know, all the insurance health systems bail out at 70, 75. No one will insure you. The government will then put everything, if you die, into probate, and there's inheritance. It's, you know, they're taxing the people who've already paid tax on their money. They're taxing the people again and again on the assets they hold. And the people that sell you these products aren't delivering for you anyway. So we need, so we need a new capital market system. And my belief is using tokenization, digital assets, we need a new class of new products that can't be tampered with, where you have micro zero fees and charges.
Right.
So when they are designed and they are traded in the market and they are used as investment capital, the real returns are there because the charges are maybe small percentages, 1 or 2%, not 40% on a pension pot. So that's robbery. That's like being raped with your eyes open.
Well, I think it is. I mean, I've stopped paying into a pension, legitimately stopped years ago paying into a pension for this exact reason. I believe the same thing you do. And so really what it comes down to is I want to stop paying money into a pension, but I want to invest in something. I want to own a piece of Trump Tower, or I want to own a piece of real estate or a piece of a business through tokenization. Right now, the barrier is this complexity from getting from the currency we are using today, the US dollar, the pound, the euro, whatever, into that token.
Well, the democratization of capital we you're talking about, which is where phase 2 of our exchange, which is the token right to exchange, which does security tokens or digital assets to fiat currency.
Right.
We're not even going to go near crypto. So it's very traditional, digitizing conventional instruments, shares, stocks, bonds with warrants, convertible notes, real estate. I mean, I'm not too buoyant on real estate, because by tokenizing real estate doesn't make it liquid. You know, you still need a market. But, you know, the digitization of things is more about the democratization of capital, because you can have fractional ownership, you can have very small parts, and you can open it up to everybody. and everyone can see what they're getting involved in, what they're buying. They know it's a fair game. There's microservices fees involved. So maybe somebody could, you know, Doris, who's on minimum wage, maybe she could afford to buy a small share of Trump Tower. Well, here's another thought.
It levels the playing field.
Imagine if we could actually re-tokenize Amazon shares.
Right.
Right, Facebook shares, Amazon shares, most of us don't get a look in for these premium shares. So the VCs and the big pension funds and what have you, they get first dibs and the retail never gets a sniff. And these are up hundreds of thousands in percentage terms and they're making their money. But imagine if we could buy a very small fraction of an Amazon share, which I think is probably trading at $1,500, whatever it is. But imagine if you could buy 10 quid's worth.
Right, because now you have access to doing it.
So democratization of capital, using crypto to create new instruments that are fair, more transparent, with smaller fees. You take friction out of the system. All of these big institutions, they're designing products that can be sold through layers of advisors and salesmen, and look at pension products and insurance products. They're sold through industry layers. In the world of blockchain, you don't need all those layers. You can have retail to product, collapse the rest of it. That's all cost. It's all friction, it's all cost. You digitize it. There is no process needs for any of these people. They had no value.
And everything can exist on this ledger.
And if you trust it, you can buy it. You know, you get everyone buyer beware. You can read what the instrument's about. You know it's fair. You make your own decisions. You're not being there's no mis-selling in a blockchain collapsed market. But in the current world, mis-selling of pensions, mis-selling of insurances, everything's mis-sold.
Hi, it's Sean here from the Crypto Wizards YouTube channel. What you've just seen is a snippet of a much longer interview of what it takes behind the scenes to start a cryptocurrency exchange, which is awesome stuff because you won't find this content or information anywhere else online. So there's some really good stuff here you don't want to miss out on. If you are interested in following this journey, if you are interested in algorithmic trading, or you are interested in what it takes to set up fiat gateways, etc., or just want to follow Nick and Dmitry in general as thought leaders in the space, then make sure you find the playlist, Crypto Exchange, the CRIX Journey, here on the Crypto Wizards channel. And we'll see you in the next video.